In addition, there's another $1.9 trillion in new borrowings. So that's a total of over $10 trillion for the next year. So this total debt line is getting steeper and is now at the highest level in history compared to the size of the economy. It cost the United States less, relatively, to fight World War II and then rebuild the economies of Western Europe than it does today just to keep the lights on in Washington. A large driver of that going forward is high levels of new debt issuance at higher interest rates to refinance previous debt. That adds up to lots of problems. There isn't enough money sitting around across the entire Milky Way to keep this going on for much longer. The capacity of global capital markets to absorb all this new debt is pushing borrowing costs up, not just for the U.S. government, but for everyone else. So investors are watching very closely for signs that things are about to go off the rails. In particular, it's these two things, and these are also closely correlated. Treasury bond auctions and how well those go, and how much appetite we see from investors across the world to buy more U.S. Treasury debt. We did a video last year that as the Chinese recycle their trade surpluses into things besides U.S. Treasury bonds, it's an ugly scene. Chinese financial regulators are buying a lot of gold, and they're also bringing back a lot of the dollars they earn abroad and parking them in their own banks and financing, for example, Belt and Road projects in friendly countries. But besides not buying new U.S. debt, the Chinese are net sellers of the U.S. government bonds they've already got. Beijing's holdings of treasuries today are the lowest in over 16 years. So the Chinese are not showing up for Scott Bessent's treasury auctions, and now they have company. Over just this past week, we had 3 days in a row that go to answer this question here. How are those debt auctions going, and how many foreigners are showing up to them? Wednesday, 6 August, an auction of 3-year debt with the worst foreign demand since 2023. Tailing means that the yields were rising throughout the auction. As this bond sale dragged on, the new buyers demanded higher yields compared to the first lenders earlier in the day. Indirects is foreign governments and major foreign institutions. They were the lowest since December 2023. Buy-side demand from foreigners is surprisingly weak. The next day, 7 August, $42 billion in 10-year paper. Very ugly this time. Another tailing auction, and another auction with falling foreign demand. And it was surprising again. Day after that, 8 August. Very ugly again on this sale of $25 billion worth of 30-year bonds, which was probably the worst auction of all. Foreign buying interest was the second lowest in 5 years. That auction Friday was so bad that rates went up along the whole yield curve. That's a misprint. That should read 10-year yield, not 10%. The credit markets are saying that when the Fed does cut rates, the market believes that inflation is going to shoot up, along with borrowing costs for anyone buying a house or a car. The yield curve will get steeper. Very low rates overnight, and for the maturities out just a few months, which may help Bessent and Trump with the borrowing costs, at least for a while. But for everyone else, borrowing rates and costs are going a lot higher. There is absolutely no good news here for the U.S. government or for American companies or for American families. This data point is shocking. It's almost impossible to believe. An African government can borrow U.S. dollars for a lower rate of interest from a Chinese bank to build a railroad than an American government doing the same thing, and a lot less than an American family trying to buy a house. China and the BRICS countries have built a new financial system. Their governments, their companies, and their families, they can borrow money for less than half what we can. Access to low-cost capital is what drives everything else. Consumer spending, household formation, company investment in research and development, government infrastructure. We don't have that access anymore. This is Hong Kong. Be good.